Hi guys, it's Thomas here from COTBase.com. Welcome to this week's Commitments of Traders review. Today we're going to have a look at the 41st report in 2014, and as usual we're going to start off with the changes in commercials positions. So here we go. As you can see, we've got the S&P 400 on top of our list with a 25% change in commercials positions. We've got 44% change in small speculators, very large change there. And if you look at the COT charts, you can see that both commercials and large speculators have basically went in the same direction position-wise, and only small speculators were very optimistic about the market. And as you can see, they have reached all-time extreme levels. So the changes are definitely pointing downwards. Question, of course, whether at this level in price we're going to see anything happening on bearish side. If you look at the chart, you can see that we've got some good, some bad examples for the COT chain signals being effective or not. But opening a 5-year chart, we can see the extreme situation on a much wider time frame. Of course, no question about small speculators being at all-time extreme levels. That's pretty obvious even on this 5-year chart. Commercials and large speculators are not that extreme at the moment. They are going towards, let me see, actually, commercials are going towards their bearish extreme, and large speculators are actually going towards their bullish extreme levels if you look at the charts, which is of course pretty interesting to see. But I wouldn't say that the picture is too clear from this COT report at the moment. It's really, I would say, the bearish change signal that may affect prices in the near term. Moving on to our next market, the S&P 500. Of course, we're not going to be expecting anything majorly different than the S&P 400. These markets, of course, correlate with each other. There's no question about that. So let's just open the 5-year chart and see in a wider perspective how extreme this market has become. And if you look at the chart again, it's basically only small speculators being very extreme, very optimistic about further rallies. Commercials and large speculators are not at their extreme levels yet. Cocoa, our next market, with its 15% change in commercials positions, 20% change in large speculators. I wouldn't say they're that large changes. If you look at the chart, we have seen greater changes in the past, so it's not really a significant COT signal this week, but it is a bullish change signal nevertheless. But I'd say let's open a 5-year chart and let's have a look at the extreme situation in the cocoa market. We're moving away from bearish extreme levels if you look at the chart, and we do see a bit of a decline in prices, but we are definitely closer to this top over here. And the question is, would this extreme widen even more while prices rally further, or is this really the end of this rally, and would we see an opposite direction in traders' positions and see a continuation of this decline that has started a few weeks ago? Moving on to large speculator COT Extreme. Here we go. Coffee 345 report extreme in large speculators positions. The same extreme can be seen in commercials positions. It is of course an unquestionable large bearish extreme being present in the coffee market. Question, of course, whether this extreme is capable of widening even to greater levels. If you look at the chart, you can see that we have been at this level for quite some time now, so I wouldn't be that surprised if this can widen even further and see a bit of a lengthened rally in this market. But nevertheless, this extreme exists in the market, and it's of course a bearish COT extreme signal, so it's advised that you follow that market week by week. I've already moved on to the natural gas, where we have a 159 report extreme, both in commercials and large speculators. This time we have a bullish COT extreme signal. If you look at the last two occasions that happened a few months ago, these signals were effective, capable of pushing prices higher. So again, we may expect this to happen. See prices bottoming out at this level and then see another rise in prices, or of course, anything can happen. Even on this 5-year chart, you can see much greater extremes in the natural gas. So there's still some space left that may mean that the prices can decline even further, and for a couple more weeks we'd see the widening of this extreme before we reach bottom in prices. But anyhow, the extreme is present, that's for sure, no question about that. Anybody who sees other reasons to go long may take this into consideration as well. And then last but not least, we've got the soybean oil market with the 128 report extreme in large speculators. This is a bearish COT Extreme, which is, as we talked about it last week, pretty interesting, having prices at such levels, getting this bearish COT Extreme signal. It's really something pretty interesting. But anyhow, we may of course see prices go even lower from these levels, judging by the extreme signal. Of course, we're not at an all-time extreme. There's still space left to reach those levels, which of course may indicate that there is some space left for a little bit of a rally before we reach to those really large, close to all-time COT extreme signals that are of course bearish signals. So that's going to be all for this week. If you'd like to have a look at other COT charts, you can do so at our COT charts page. If you'd like to have a more in-depth and detailed COT analysis, then of course we've got this page for you. I hope you enjoyed my review, and I hope to see you next week. Have a great weekend. Take care. Bye-bye.